that I have. In fact, the top line number is also looking quite strong, 13,189 crores. That compares to 13,148 crores that we had as an estimate. So that's absolutely in line with street estimates. It's the EBITDA number, 1,990 crores is what I saw. That's a really strong number that you're seeing on the EBITDA front. That's a 15.1% margin. And you know what? I think the tractor segment, I'm just going to take a minute to calculate the tractor segment margins, but I think they've come in at 20%.
Sure, go ahead.
Yeah.
Till then, let me just read out some of the other numbers that have come through. In terms of revenue, the automotive segment has seen significant improvement. So that has grown to about 9,000 odd crores. As well, the tractor segment, like you said, Sonia, there as well, it looks like, in fact, over there, operationally, it looks like there's a good improvement. So I'll just wait by for you to calculate those numbers.
In fact, the margins have come in at 19.4% for the tractor segment. That is a 723 crore EBITDA number for the farm equipment segment. That's a big bump up. You know, it compares to 466 crores on a year-on-year basis. So it's a good bump up that you're seeing on the tractor segment margins. Now, 19.4% compares to 20.4% last quarter and about 21.2% the quarter before. So you can say that on a quarter-on-quarter basis, the tractor segment margins have perhaps fallen. But that's fine because raw material costs have also gone up. So, you know, quarter-on-quarter, it was expected to slow down. But year-on-year, these numbers are looking very good in the tractor segment. 19.4% margins in this quarter compares to 16.88% same time last year. So that's a big jump in the tractor segment
Sonia,
margin.
there's some comments in terms of the outlook. So the management says that economic activity is expected to gather pace as the transitory effects of implementation of GST recede. The outlook will be lifted by tailwinds from normal rainfall, with the Weather Bureau forecasting a normal monsoon. As well, they say that, however, rising crude oil prices, which have already risen noticeably, call for greater prudence. Also, global growth backdrops to remain benign, etc., etc. So I guess the main thing over here remains that the headwind could come from the crude oil prices.
Okay, I've also calculated the auto segment margin. So I just want to take you through that. The auto segment margins have come in at 8.4%, and this is quite healthy. It was 8.5% last quarter. So even despite higher raw material costs, the auto segment margins have remained stable at 8.5%, and the tractor segment margins have, you know, stayed at that 19.4% mark. So I think this is a really good performance as far as the operational level is concerned. If you look at the growth that we've seen in the auto segment itself, 9135 crores is what they've reported this quarter compared to 8910 crores. So there is a good amount of a bump up that we've seen both sequentially and year on year in the utility vehicle segment. So both segments actually firing on all cylinders on the operational front. I think pricing power is something that M&M has had, and now that, you know, the tractor segment is in an upcycle, they are sort of benefiting from this. Remember, the stock has actually had a decent run. I mean, it's outperformed the auto index. This year, it's up almost about 13-odd%. The auto index is down. Despite that, it's seeing an up move post its numbers, which means that, you know, of course, operationally, this is a very strong set of numbers that the company has reported.
Okay, we have some reactions coming in. Prakash, Diwan, Ashwin Patil and Prayesh Jain now join in. Gentlemen, good afternoon. Prakash, let me start off with you. How the first numbers looking to you?
Oh, phenomenal. I think the tractor segment, while all of us do know that that was something that is keeping the stock and the company move in such strong trajectory, but as Sonia alluded to, the margin growth continues, because remember, post-September we've had some GST rated benefits also for the tires and equipment that goes into tractors. So that also will continue for the next couple of quarters. And I think what's heartening, Sumera, is the fact that their passenger business also, the PV segment has started contributing also, which was not happening for the last 2 quarters because of the launches that they've had, the revised KUV and, the newer launches that they're looking at. And remember, whenever oil goes up, the differential between petrol and diesel makes diesel vehicles much more favorable. So they won't have such a big issue in terms of sales growth also. So very, very decent set of numbers. I think the stock will continue its momentum.
Okay, very good set of numbers. So this is, almost 300 basis points year-on-year jump in the tractor segment margins to 19.4% versus 16.6%. So very, very strong in terms of tractor margins. We have Ashwin Patil and Prayesh Jain joining into the conversation. Prayesh, how would you react to these numbers? The EBITDA overall margins at 15.1%, better than our expectations. But what did you make of this tractor segment margins at 19.4%?
I think it's a good set of very good set of numbers, and in spite of a trajectory that we've seen in terms of volumes going off in the generally the tractor segment volumes come off in Q4 a bit. In spite of that, the margins have stuck to that 19.5%. I think it's a pretty good set of numbers that they've declared.
Okay, so good set of numbers, but how are you positioned on the stock now? Because the consensus FY18 EPS is about 40 rupees, FY19 stands at about 47 rupees. So it's priced at almost 18-19 times FY19. Do you think, given the growth that M&M is seeing, this is a reasonable valuation, or do you think it deserves more? And how are you positioned on the stock now?
I think it is, it deserves far more, and that is mainly reason. If you just strip off the other income, dividend income from the subsidiaries and also the listed value investments from the stock price by computing the value per share and giving it a 20% haircut, the stock seems to be trading at around 15 times FY20 earnings. This is quite low compared to the other listed peers, and in that sense, I think it deserves much better multiples, given the growth trajectory that we are likely to see with new UV launches coming across, and also the tractor segment likely to deliver steady kind of growth in the near term. So I think, and plus the electric vehicle advantage which Mahindra has given its first mover thing. So in that sense, I think M&M is one of our top picks in the auto space right now.
Okay, M&M is one of your top picks in the auto space. So we also have Ashwin Patil, who is with us. So Prayesh, just stay on. Ashwin, would you also concur that despite the stock trading at around 18-19 times FY19, given how strong this margin trajectory and operational performance is, it deserves to trade better? And would you scale up your FY19 EPS post these numbers?
Yes, absolutely. I would say that the company has reported a fantastic set of numbers this time, and especially on the farm equipment segment. And going forward, we think that with new launches coming on the UV side and expectations of good monsoon, which has already hit Kerala right now, a few days before expected, and going forward, as we know that the consumers are now favoring diesel vehicles, which are almost about 95 to 96% of M&M's portfolio. So M&M will be definitely gaining brownie points ahead of any of its competitors. So definitely this company deserves higher multiples based on FY20. We think that along with its listed subsidiaries, which would add another about 200 to 300 rupees, I think definitely the stock, we would be re-rating the stock on the positive side.
Okay, so the stock could get re-rated on the positive side. The tractor segment, of course, as we know, has been doing quite well for the entire industry, right? I mean, it is in an upcycle. But what is your prognosis? Prakash, Diwan, I wanted to come to you on this. What's your prognosis of how the utility vehicle segment is going to do? Because now what they're doing is trying to sort of increase the distribution reach, coming out with a whole new, list of products. Of course, their market share this year has fallen in the utility vehicle segment. I think it's about 25% or so. But do you get a sense that they're getting their act together there, and this segment could also start firing now?
So, Sonia, I'll tell you, the key triggers there, as you know quite well, has been that they've lost market share to the compact SUV, launches by the competition, particularly Brezza and Creta and stuff. Now, that is a price point that the Mahindras didn't have too much in terms of offering. So the KUV, the rebranded KUV, has tried filling that gap. And the new launches, my sense is, are going to be competing against the same, filling those kind of price points. And remember, if they get their act together on the petrol engines, then you have a killer combination happening, because diesel, they are way ahead of the others. And if the petrol technology also kind of gets, tested and ready to be commercially launched, so you will have some new launches making a big difference to, this particular utility vehicle segment for them. And as the rural segment picks up, remember, UV is quite well correlated even to that. The Boleros of the world actually get sold more in suburban India rather than in small town India rather than the metros and all. So I think there's going to be a very good combination where the stock is, you mentioned 18, 19 times FY19 estimates. I think the estimates will get first revised. And secondly, this segment was never rated very highly for Mahindra because of competitive intensity, which will probably change. So the price earning growth multiple is what I think will change the dimensions for the stock.
Okay, so what are your target prices on the stock now? I mean, it's had a fair bit of a run-up, right? So it's at 860.
But that's more of a catch-up. Yeah, so that's more of a catch-up. It, in fact, didn't play much. It didn't work positively for the stock. You know, last 4 quarters, it's been... If you take the last 1 quarter away, it wasn't doing so well as much as, you know, the Marutis of the world. And now I think it will probably start going ahead of them. So my sense is that you should see it in 4 digits very soon. And on a console basis, the other businesses are also firing well. So that could continue adding a lot of, you know, tailwinds to that. So my expectation is we'll see 1,000 plus very soon on the stock in probably the next 2 quarters.
All right. Prakash, Prayesh and Ashwin, thank you so much for joining us and giving us your views. So just to summarize, it's a pure margin expansion, you know, story here. Not only has the tractor segment done very well, it's more than a 300 basis points margin expansion, but even the automotive segment, which was ailing for a while in the last 1 year, that has picked up quite a bit. So 350 basis points year-on-year expansion in the automotive segment, both firing well, and that's the reason why overall the numbers are looking much better than what the street was expecting. I won't be surprised if there is a, you know, an upgrade in the FY19 EPS estimates as well.
Okay, earnings upgrades possible, Sonia is telling us, and that always means higher target prices as well.